Hello and welcome to the Capital Markets on Channels Television. I'm Edidi Ongiwang. The Debt Management Office listed its third sovereign Sukuk bond on the Nigerian Stock Exchange and FMDQ Securities Exchange. Now, a statement from the DMO says the 162.55 billion naira 7-year tenor debt instrument, which carries an 11.2% interest rate per annum, was oversubscribed by 446% to the tune of 669.124 billion naira. Proceeds of the Sukuk bond will be used to finance 44 economic road projects across the 6 geopolitical zones in the country. So far, the Debt Management Office has raised a total of 362.57 billion naira in less than 3 years through Sukuk issuance for the rehabilitation and construction of major economic roads across the country. The DMO commends the issuance of sovereign Sukuk in September 2017 as one of the ways to bridge Nigeria's infrastructure gap and promote economic growth. Meanwhile, the Central Bank of Nigeria plans to issue Nigerian treasury bills worth 570.4 million naira in the second quarter of 2021. In a calendar posted on its website titled Nigeria Treasury Bills Issuance Program for its second quarter, the bank will issue 92.05 million naira for the 91-day bills, 79.65 million naira for the 182-day bills, and 398.7 million naira for the 364-day bills during the period. According to the banking regulator, the maturing bills during the period are 92.05 million naira for the 91-day bills, 79.68 million naira for the 182-day bills, and 398.7 million naira for the 364-day bills. The CBN, however, says that offer amounts are subject to change at short notice. We're looking at earnings now. GT Bank releases full-year results for 2020, which shows improved performance across all key financial metrics, despite the economic challenges caused by the COVID-19 pandemic. According to the report, the bank's group gross earnings grew by 4.6% to 455 billion naira as of December the 31st. Last year, up from 435 billion naira recorded in the same period in 2019. At the same time, its net asset grew by 18.5%, pre-tax profit rose by 1% to 238 billion naira, after-tax profit climbed by 2.3%, while its earnings per share increased by 2.2% against the previous year. Meanwhile, the company's board has proposed a 2.70 naira per share as final dividend to shareholders for the financial year. Still on earnings now, Union Bank also released its full year 2020 earnings, showing that the lender's profit after tax rose 2.8% to 25.4 billion naira from 24.7 billion naira recorded in 2019. Now, according to the results posted on the Nigerian Stock Exchange, gross earnings fell 1.9% to 156.9 billion naira in 2020 from 159.9 billion naira the year before. Non-interest income was higher by 1.6% at 44 billion naira from 43.3 billion naira in 2019, driven by growth in net trading income as well as revaluation gains. Operating expenses grew 10% to 78 billion naira due to an increase in regulatory and technology expenses. The Lagos State Governor Babajide Sanwo-Olu has announced that the Lagos Free Zone project will be delivered in the next 2 years. Now, during a visit to the area at Lekki, the governor mentioned that the project is about 50% gone and will be completed in the first quarter of 2023. He explains that the project will boost the state GDP, create job opportunities for residents of the state and Nigeria as a whole. Let's take a listen.
It's about creating jobs for our citizens, it's about creating opportunity for our people, and it's about transforming and changing the landscape of the host community. And so I want to thank all of you, and I want to say to our young enterprising women and men that this is the future that you all need to take forward and hold this very, very strongly. Because we want to be sure that everybody all around there are on the same page, and we're about ensuring that we solve the issues, and we create an enabling environment for businesses to thrive.
Well, the Managing Director of the Nigerian Export Processing Zones Authority, Professor Adesoji Adesuba, is promising to provide an enabling business environment for both local and foreign investors operating in the nation's free trade areas. This, according to Professor Adesuba, is expected to help the country benefit from the technical expertise and value addition of the investors. Professor Adesuba was speaking at a meeting with officials of the International Finance Corporation who are calling on Nigeria to diversify its economy. Let's take a listen.
What we say here is impossible is nothing as long as we give all our hearts to it. Nigeria first, always, and removing all the constraints to development, seeing things differently, reinventing the wheel, so to say, and thinking out of the box, viewing things that will keep us down, like corruption, engaging the stakeholders, bringing in investments, and treating the investors like our saviors, giving them all it takes, and developing infrastructures jointly. Sometimes it's not all about government. The private sector can also take advantage of the challenges and turn it into wealth. And that's where we are looking at to develop special economic zones within this context and in Nigeria for us to be able to take care of things like unemployment, security, technology transfer, and an overall well-being for the people of the country.
We'll get to the markets now. Losses recorded in the shares of heavyweight cement companies Dangote Cement and Boa Cement on the final trading day of the week wiped off the cumulative gains of 0.7% that we saw in the market as at Thursday, as the market suffered its seventh consecutive weekly loss. The all-share index declined by 0.69% week on week to close at 38,382.39 points, bringing the year-to-date loss to minus 4.7%. Activity levels were mixed as trading volumes rose by 44.7% week on week, while value traded declined by 6.5% week on week. Sectoral performance was mixed as the banking and oil and gas sectors posted gains, while the industrial and consumer goods recorded losses. The insurance index, on the other hand, was flat by 0.01%. Now, moving to the bond market now, the bond secondary market turned bearish as investors reacted to the weak economic data released earlier in the week and traded cautiously in anticipation of the MPC's rate decision next week. The average yield in that space expanded by 26 basis points to 9.5%. Across the benchmark curve, we saw yields higher at the short, mid, and long end of the curve on Friday. There were 3 deals worth 2.50 billion naira. The Treasury bills market, the week closed on a bearish note as tight system liquidity continues to force sell-offs from banks. Also, there was some level of inactivity from market participants as they shifted their focus to the primary market auctions in both segments of the market. The average yield across all instruments in that space expanded by 13 basis points to 5.3%. Now, across the markets, the average yield declined by 19 basis points to 6.6% at the almost secondary market, and then expanded by 64 basis points to 3.5% at the Nigerian Treasury bills market. Well, it's been a packed week for the markets as investors chewed on a slew of data from unemployment to inflation to market auctions and then the Sukuk bond listing by the Debt Management Office. Well, joining me now to drill into these and more is Christian Orajekwe, the Managing Director at Quadra Securities. Good evening, Christian. Thank you for joining us on the program. Good evening, Christian. Can you hear me?
Yes, I can hear you.
Oh, good evening. Thank you for joining us on the program. Well, data released this week by the DMO showed that Nigeria's total public debt rose to 32.9 trillion naira at the end of December. Now, what do you think can be done to manage the country's debt levels?
Okay, thank you very much for having me. I think there are several reasons why countries borrow. And in Nigeria's peculiar case, government borrowings have been towards capital expenditure and also to fund some recurrent expenditures. Um, I mean, if government is very serious about ensuring that those borrowings are not increasing at the levels we've seen over the years, there has to be very serious effort in significantly deepening the country's ability to generate revenues internally. Um, as you know, I mean, Nigeria's revenues come from selling of crude oil and generating revenues internally. We have a strong capacity to generate revenues internally, but there hasn't been so much effort in being able to maximize the potential of that revenue generation. We have one of the lowest, tax to GDP ratios in the country across the world, and also sources of revenues, for instance, like revenues that come through customs revenues, are also not being very efficient because of policies around importation and the borders as well. So, I mean, these are some issues that actually some long-term fiscal issues that has to be addressed if Nigeria, if Nigeria needs to significantly improve internally generated revenue and then to cut down, on borrowings to support the budget.
So one of the reports we received this week was from the NBS, showing that Nigeria's inflation rose to 17.33%. Was that in line with your expectations at Codros, and what will that mean for the investment environment?
Numbers we've seen, we saw last month and over the last couple of months have, to a large extent, been very surprising in the sense that they have consistently beat analyst expectation. We had expected inflation of around 16.9, 16.8 levels, but it came out at 17.2, which like I mentioned earlier was way more above analyst expectation, and that has been largely driven by food, significantly increasing food prices, which to a large extent has to do with the shortage of supply because of the insurgency issues that are going on in the north. And as we saw in the market last week, when the inflation numbers was released, what that means was there was some reaction particularly in the fixed income market. We saw yields trend up because what a rising inflation just means is that the negative real return on investment just keep deepening. So in a situation of rising inflation, what we keep seeing in the market are yields going up just because investors have to ask for rates that to some extent should compensate for the high inflation numbers.
But the CBN says it will be offering treasury bills worth 570.4 million naira in the second quarter of the year. Now, what do you make of this, and how is this going to impact liquidity in the system, for example?
The central bank's T-bills issuances are usually to refinance, maturing bills. They may not essentially indicate an increasing borrowing from the central bank and the government. So they're just essentially refinancing, bills, that are coming in. So that cannot be taken in isolation to determine how it impacts system liquidity. Other factors need to be considered. As a matter of fact, between this month and the early months of April, there is a sizable amount of government FGM bonds that will mature into the system. That we expect to have very serious liquidity implication. So from our view, we think that yields are likely to come down in the next 1 month between now and mid to end April, and to offset any impacts at all, if at all, that government's activity in the T-bills market will have on system liquidity. But there are other factors. So you need to factor, CRR debits that happen periodically. In the last 1 to 2 weeks, we've seen the central bank being very consistent in taking money out through the OMO space as well. So these have to be taken into consideration in determining what happens to system liquidity.
All right, Chris, we'll need you to hold your thoughts there, and we'll continue this conversation when we return in a moment. Please stay with us. back and thanks for staying with us on the program. We still have Chris Orajikwe, the Managing Director at Kodra Securities, with us. Thanks for staying with us, Chris. So there were about 2 primary market auctions this week at the Nigerian Treasury Bills market and the OMO market. What was the turnout like and how did that shape trading, investment sentiment for the week?
Okay, so at the NTB auction and the OMO auction, what we saw was some increased level of subscription. As you know, for the NTB market specifically, we have seen gradual uptick in yields, since the beginning of the year. And that has been attracting a lot of liquidities from market participants. The CBN has more specifically been consistent with increasing rates at the longer end of the market. When I say, I mean the 365 days bill, for instance, that's the rate in that segment of the market has consistently been on the increase. So we have seen a lot of fund managers, mutual fund managers, and pension funds, and some retail investors as well, subscribing to instruments in that space. And so last week wasn't an exception, and also in the OMO space as well. In the last the auctions before this had very low participation, but last week it's over 100 billion naira being sold to offshore investors at rates that were consistent with the rates we've seen in the last couple of months.
Let's talk about earnings now. We saw some of those results coming to the market this week, the likes of GT Bank and Union Bank. What did you make of those numbers, and how do you think that's going to influence investor sentiment towards those stocks?
Yeah, I think I will speak specifically to GT earnings, which is the only company we cover between the 2 companies you mentioned. So GT released earnings, I think on Wednesday last week, or Thursday last week at the close of markets, and we saw earnings grew very marginally. But I think what was interesting with the number was the fact that the bank, has announced a 2.70 naira in dividend payments, which was just about the same rate as was announced by Zenith Bank. I think market perception of the results was very positive. You will recall that the year 2020 was a very challenging year with the pandemic, and for banks to have delivered that marginal but very stable earnings was something that investors were very excited about. And GT's result was very also unique because there was a lot of delays in releasing the results. GT usually will release in the first week in the month of March. But the release of that results took some time. There were a lot of concerns, from the market community in terms of what that result would eventually be. But when it came out, it was widely accepted. We saw that result driving some sentiment back to a market that had been bearish before the result was released. So before the result came out on Thursday, we saw some excitement. And then on Friday, when the result was made public, we saw very bullish activity, particularly for the banking stock. So we saw GT, we saw Zenith, we saw excitement around Access and UBA as well.
So GT Bank is the 3rd Tier 1 lender to release its earnings. We saw that of Zenith Bank and UBA. What are your expectations from the earnings of other Tier 1 lenders, for example, Access Bank and FBN Holdings?
I expect results that will be quite similar with what we saw with GT. As you know, banks' earnings, last year, were affected by the fact that the yield environment was, we saw a significant, drop in yields. So interest income for a lot of banks wasn't at levels that we used to see before. So we saw very marginal growth in interest income. Although we saw compensation, with significantly reduced interest expenses, but we also saw, lines like some non-interest income, for instance, the fees and commission that they charge from, e-businesses. We didn't see so much growth there. And we've also seen some, level of support from the fact that banks had, revaluation surpluses from following the devaluation of the currencies. So for Access, I would expect, and FBN, I would expect results that would to a large extent mirror that we've seen from, Zenith and GT. We had from the beginning of the year had expectation of very flat to marginal growth in banks' earnings, and that's what we expect from Access and FBN as they release their results.
All right, well, we'll just keep our eyes on that to see what unfolds. But then the CBN will hold its MPC meeting next week, Monday and Tuesday. What are you looking to hear from the CBN? Should we expect a cut, hold, or raise in rates?
Continue to hold rates. I think the CBN has struggled with the MPC meeting in the last, in the last couple of meetings. We are in a situation where we just exited the recession with a very marginal growth, and we have inflation also spiraling. So these are two, and then CBN is also focusing more on exchange rate stability. So these are three dynamics, that come into picture as the Monetary Policy Committee meets next week. But I think that overall, they would announce, even whilst we've seen, inflation spiraling, I think that they would, there will be a unanimous decision for holding rates, at current level, just to support the fledgling growth, just the recovering growth that we are seeing, and also to ensure that the system is not put overly under pressure by, raising rates.
So what's your outlook for the equities market in the short term and next week? We know that next week all eyes will be on the MPC. So what are your expectations for markets next week?
I think for markets, we've seen very sizable. I'll start with the equities market. We've seen very sizable corrections before last week. The GT result, like I said, brought about some excitement in the equities markets. But beyond that result, I think that the equities markets have largely struggled because of the developments in the debt market, with treasury bills is going up. I think that in the short term, I expect a market that will be fairly sustained by GT's corporate action, after which I expect the market to go quiet. From the interactions that we're having with a lot of clients, I think that there's a lot more interest now, in government, treasuries and mutual funds, really. So, in the most shorter to medium term, I think we expect the equities market to be more a quiet market. We expect to see more activities in the debt markets, as investors just pretty much try to cash into the rising, yields on government treasury bills. We're seeing more commercial papers coming out. These are also crowding funds away from the equities markets, and the bonds market as well. We've seen yields, trend up over the last couple of auctions. There will be an auction next week. I expect a lot of pension managers and asset managers as well participating in the auction. That is also going to deny the equities market of liquidity. So we expect more activities in the debt space than in the equity space. So I think that beyond the GT results, I don't see so much steam for equities to rally beyond current levels.
Thank you so much for coming on the program. I appreciate spending your time with us this evening. Christian Orajekwe is the Managing Director at Quadra Securities. Well, that is on the program tonight. Thank you for watching. I'm Edidiong Iwang. Do stay safe.